Yeah, it's not a very kind of interesting forecast, but the thing I've been sticking to for like 18 months now is that house prices in aggregate were probably going to be somewhat sideways, which is what we've seen. I mean, they had a kind of a weak 2022, but not a crash, just kind of they softened, and then they had a rebound in 2023. So house prices in aggregate are going sideways. Obviously, there are certain hot markets that are cooling off, and there's certain linear markets that are up, but nationwide average is range bound. Um, and equities so far are the same way, where they had a decline in 2022. It wasn't catastrophic. They rebounded, kind of around all-time highs, but still down in inflation-adjusted terms or compared to T-bills, for example. And I think that's probably a story going forward is, equity prices and house prices are high, but then they're supported by so much, just ongoing fiscal spiraling that's happening.
In this discussion, Lyn Alden provides a nuanced perspective on the current state of the housing market. Over the past 18 months, she notes a trend of house prices remaining relatively sideways, with a temporary softening in 2022, followed by a rebound in 2023. Alden suggests that while certain hot markets are cooling off, nationwide averages are range-bound. She draws parallels between the 70s and the potential for stocks and house prices to underperform in inflation-adjusted terms over the next decade. Despite high valuations, the continuous fiscal support in the background makes her skeptical of a 2008-style crash. Alden highlights the importance of monitoring the bond market for potential crises, acknowledging pockets of danger in areas like commercial real estate. Ultimately, she emphasizes the significance of owning scarce assets as a strategy in the current market conditions. With that, let's dive into the video to hear her full thesis.
Um, and so one thing we can learn from the 70s is that, the performance of the stock market on its surface didn't look that bad, but when you inflation adjusted it, it looked terrible.
Mm,
And so I think that could be a story over the next decade, which is stocks on average don't do particularly well in inflation adjusted terms, and house prices in general probably don't do well in inflation adjusted terms because they're
mhm,
already rather richly valued compared to incomes or for stocks compared to their earnings on average. But that the sheer amount of nominal GDP growth, kind of background fiscal driven types of things that are happening, it makes me not really expect a 2008 style kind of big disinflationary deleveraging. And so now again, I would update that if I started to see it.
mhm.
But it's just not something I'm seeing right now. That basically a lot of investors, they always want to fight the last battle. They think of 2008 and they're always worried about another 2008.
Mhm.
Whereas I think that the crisis is more in the currency and the bond market,
Mm.
rather than equities
Yeah.
or real estate or things like that. Now, of course, there are pockets. Commercial real estate is still a mess in many ways,
Yeah.
and the so kind of mid-sized banks and local banks, they have a lot of exposure to that commercial real estate that the big banks don't have. And so there certainly are pockets of danger out there. But basically, it's kind of like if you look at an emerging market in a recession, a lot of the prices that you'd think would be down are not down because the currency is also down. And so they're down in dollar terms or they're down in gold terms, but they're not down in local currency terms. And I think what we're going through now is kind of a mild version of that, except in developed markets where the currency themselves is part of the bubble that's not doing well. And so owning the kind of the scarcest assets is kind of one of the few ways out of that.
In this next discussion, Lyn Alden explores the possibility of double-digit inflation within the next year, but she takes a cautious stance, leaning towards a more gradual inflationary trend throughout the 2020s. Alden emphasizes the significance of energy dynamics, citing a potential energy crisis as a key variable that could influence inflation outcomes. While she refrains from making precise predictions for the next 12 months, Alden anticipates another liquidity cycle and economic reacceleration within the next 2 years, potentially leading to increased inflation. The discussion also touches on the role of the Federal Reserve and potential turbulence during the transition from Treasury liquidity drain to Fed balance sheet expansion.
I don't know about this time next year. That's a pretty aggressive call, double digit inflation this time next year. So I would probably take the under on that. Um, I am looking to see. So my case for a while is that the 2020s on average be more inflationary than the 2010s, and but that it wouldn't be a straight line. So we got the initial inflation spike. I started talking about disinflation. We started to see monetary tightening. Kind of harder base effects when you're measuring things year over year. And so that's played out. I think a key question going forward is there's a couple ones to watch. One is what does energy do, right?
Mm.
Because whether or not we have price inflation of double digits a year or two from now, there's very kind of flowchart Boolean outcomes. Like, does Iran's oil come off the market or not? Right? That's
Yeah.
because that's if you list things how you can get to double digit inflation. So right now I'm saying I would take the under, but where would I be wrong on that? It's if we have some sort of major energy crisis, for example, and that's more of a geopolitical question than a predictable economic question. So it's making sure you know the variables that could lead to certain outcomes. So I do expect in the 2020s that we will have more energy scares and more periods of kind of frighteningly high oil or gasoline prices, or in some cases, natural gas. I don't necessarily know what's going to happen in the next 12 months. There's certainly variables that can make that happen. Um, I you know I've been trying to kind of stick to a 2 year time frame, kind of 2024 and 2025, because I do expect within that 2 year view, we're probably going to have another liquidity cycle. We're probably going to have another rising economic acceleration within that 2 year period. And so if we do get that, I would expect inflation to come back with that. But again, I don't know if it would be double digits because that would partially depend on what's happening with energy shortages.
Got it.
Um, and another key factor to watch is so we talked about liquidity
Hmm.
and the offsets that's been happening. So there's still about 1 trillion in reverse repos that
Hmm.
can be pushed back into the market. A question is what happens after that? Does the Fed start going back to kind of gradual balance sheet expansion? And that could be a turbulent period when you're potentially doing a handoff from the Treasury's liquidity drain to the Fed,
Mm.
because they might not want to jump in right away, if they're still trying to get inflation back down to their official targets the way they measure it. Um, and so I think we could have pockets of turbulence, but I do expect over the next 2 years probably to see that another liquidity cycle, another economic reacceleration cycle, and inflation to come with it. And the question is, does that start in mid 2024? Has it already started?
Hmm.
That's something that we're still monitoring because liquidity suggests it has probably restarted, but we're not really seeing that in the economic data yet. And so I still am kind of worried about kind of the call it first 6 months or so of 2024. We'll see how that plays out.
Today, Lyn Alden shared crucial insights on the housing market and inflation. House prices appear to be moving sideways, driven by ongoing fiscal trends. Alden cautions against aggressive inflation predictions, citing energy dynamics and geopolitical factors. Looking ahead, she anticipates more energy scarcity in the 2020s. Alden also discusses the potential for another liquidity cycle and economic reacceleration in the next 2 years. Pockets of turbulence may emerge in 2024, so stay informed. If you found today's insights valuable, subscribe, like, and share your thoughts in the comments below.